some of you may know this, some of you may not, but when I first heard about Bitcoin for the first time, I had been reading all sorts of science fiction books as a kid where there was, anonymous digital cash and people could do all sorts of exciting things. And that was like in the late 1990s when I was reading that. And then I heard about Bitcoin in February of 2011. And it was like, yes, the science fiction money I had read about as a kid is finally here. I've been waiting over a decade for this, and now it's here. And I thought I was going to go to work that day. Didn't. Stayed home the entire day reading every single thing I could find about Bitcoin. Stayed up all night, and I'm someone who needs my sleep. If I don't get 7 hours of sleep a night, I feel miserable the next day. Stayed up all night. Stayed up all the way to the next morning, reading about Bitcoin until the next afternoon. And then I went to sleep at maybe 4 p.m. and then got up at about 6 p.m., only 2 hours later, maybe even not that. And then read about it again and stayed up the whole night until the next morning, until maybe 10 a.m. And this was just so exciting because I knew all the exciting things that I had read about in these science fiction books as a kid were about to come to fruition in the world thanks to the invention of Bitcoin. And this went on for almost an entire week, and I only slept maybe an hour and a half, 2 hours a night for a whole week. And after doing that for a whole week, I got so sick from lack of sleep. But I had the excitement for a week, but after a week of no sleep, it was too much, and I couldn't even drive myself. I had to call my friend and said, help me. I need you to take me to the hospital. I'm so sick. And he drove me to the hospital, and they gave me some sort of a sedative and told me to calm down. And I think I slept maybe 12 or 18 hours straight when he got me home. But then I woke up the next morning and read more about Bitcoin. And here we are almost 8 years later, and I've been doing nothing but promote digital currency adoption around the world for that entire time because I'm so excited about it. And hopefully we have some luck with the slides now. No? No luck with the slides. So.
Natalie?
So I suppose that means I get to tell another story. So one of the things that really caught my attention about Bitcoin in the early days was I heard about it in reference to the Silk Road. Who else in this room heard about Bitcoin because of the Silk Road? Right? Not that you were buying or selling anything, but you heard about it in the media through the Silk Road. I see quite a few hands going up there. That's how I heard about it. And thankfully, I was never interested in drugs as a kid or as an adult. But I heard that people were buying and selling drugs on the internet with some sort of money, and I thought, what kind of magic internet money could this possibly be that was enabling this sort of thing? And that's what inspired me to look into it. And has anybody else in this room read Cryptonomicon by Neil Stephenson? Has anybody read that book? Fantastic. I see a couple of hands out there. Fantastically exciting book where people are running around all over the internet, or all over the world, setting up data centers. They're using, anonymous cyber cash to do it. And Neil Stephenson is a fantastic author. And here we go. So, and I'll finish. And to finish up that story, Neil Stephenson, I had the honor of setting him up with his first Bitcoin wallet back in maybe 2013 or 14. And it was stunning to me that this guy that had written so much about the impact of anonymous digital cyber cash was going to have on the world, he didn't have a Bitcoin wallet when I met him. So I made sure to change that. And I believe I sent him an entire Bitcoin, and I hope he held on to that. So, and for anybody that doesn't know, I'm Roger Beer. I was the first person in the entire world to start investing in this ecosystem. And lost a lot of sleep over it over the last 8 years, but I'm grinning from ear to ear because it's been so fun. As that leads us to, why did I choose to drop everything else in my entire life and focus on this full time back in 2011 when Bitcoins were less than $1 each? And it's basically like I told you, I had all these science fiction books as a kid. My career had been in computer science, education in computer science, and economics. So if you think about it, Bitcoin is convergence of those exact two things, computer science and economics, and having the imagination that I got from reading science fiction as a kid. And studying the economics really made me appreciate this. This is a quote from Brian Armstrong, the founder of Coinbase, one of the companies that's helped more people in the entire world get access to digital currencies than any other. And Brian says that digital currency may be the most effective way the world has ever seen to increase economic freedom. If this happens, the implications are profound. It could lift many countries out of poverty, improve the lives of billions of people, and accelerate the pace of innovation in the world. Who here is excited by the stuff you read about in science fiction books coming in the future? All right, I see a lot of hands for that one. Well, digital currencies have the ability to help make all these science fiction things science reality faster than they otherwise would have been. And here's why economic freedom is important, right? It leads to a higher per capita income. Everybody wants to earn more money. It leads to higher life expectancy, right? Everyone wants to live longer. Higher literacy rates, better income for the poorest 10% of society, improved environmental protection, fewer wars, higher self-reported happiness of citizens, and less corruption and bribery. And that's one of the ones that I think is really important to harp on. In countries with lots of economic freedom, if you want to start a business or engage in something, you basically just do it, and you don't have to ask for permission from a whole bunch of people to do that. In countries with less economic freedom, there's a bunch of bureaucrats at every step of the process that you have to beg for permission to do whatever. And remember, what businesses do is they provide their customers with something that they want, and it's something that the customers value more than the money that they're paying for it. So both the business and the customers are better off after the trade happens. Otherwise, the trade wouldn't happen. So every business is working to make the world a better place, yet they have to ask for all sorts of permission from bureaucrats and politicians and whatnot to make the world a better place, which is absolute nonsense. So in countries with less economic freedom, oftentimes the easiest way to get that permission to make the world a better place is to bribe the bureaucrats or bribe the regulators. In an economically free country, you're just allowed to do it, so there's a lot less need for that sort of corruption and bribery. And here we have a list of countries around the world ranked by the amount of economic freedom they have. And on the left, we see the countries with the most economic freedom, countries like Hong Kong, Singapore, New Zealand, and Switzerland. And on the right, we see countries with the least amount of economic freedom in the world, countries like North Korea, Venezuela, Cuba, and a bunch of places that aren't nearly as nice to live as is the one on the left side of the chart here with more economic freedom. So very, very clear example of the effects of having more economic freedom versus less. But sometimes a picture's worth 1,000 words. So here we have pictures of Hong Kong in the 1950s versus Hong Kong today. And in that time, it went from being this little, sleepy port to an absolutely world-class economic powerhouse of a city. And in that same time, we have pictures of Havana, Cuba, a place with very little economic freedom. And in that same period of time, Havana didn't change much at all. What an incredibly powerful example of the benefits of economic freedom in just a few short decades. Imagine how much better Havana could have been today if they had had more economic freedom over that same period of time. So that brings me to why I'm so excited about Bitcoin. And I think Miko talked about the fundamentals. If your fundamentals aren't wrong, stick with it. And so Bitcoin had certain defining characteristics that made me sure that people were going to start using it as money. I knew it. There was no doubt in my mind that people all over the world were going to start using Bitcoin as money. And I'll give you a little hint as to what that was, or what it wasn't. The reason that I was sure people were going to start using Bitcoin as money wasn't because it had bit in the name, it wasn't because it had coin in the name, and it wasn't because it was called Bitcoin. So what if we made a list of what those characteristics were that made Bitcoin Bitcoin? And I have some criteria sourced, right? The original Bitcoin white paper, Satoshi Nakamoto himself, and the original Bitcoin.org website. And even more important than that, what if we made a list of things that made Bitcoin popular in the first place? All right, that's a good question. Why did Bitcoin become popular? Why is Bitcoin this worldwide phenomenon it is today? And when I say Bitcoin now, I mean cryptocurrencies in general. And luckily for all of us, I made these lists. And so here we have the Bitcoin white paper, right? It's defined right there in the title, as Miko mentioned in his speech. It's a peer-to-peer and open source. That's important as well. Great job to Miko for pointing that out, but it's a peer-to-peer electronic cash system. It has to be usable as cash. It's a cash system. And here we have, right from the original Bitcoin.org website, it's advertising fast, cheap, reliable payments. And I have a little short 10-second speech I've been giving about Bitcoin since 2011, and that's that it allows you to send and receive any amount of money with anyone, anywhere in the world, instantly, cheaply, and reliably. People like the sound of that. Imagine if back in 2011 I started telling people, let me tell you about this new thing, Bitcoin. It allows you to unreliably, super expensively, sometimes send money with people. Nobody would have been interested at all. right? That's not something that's interesting. A slow, expensive, unreliable payment system isn't something that people are going to be interested in. Fast, cheap, and reliable is what people want. And if a cryptocurrency isn't fast, cheap, and reliable to use, people just plain aren't going to use it. And here we have another quote from Satoshi himself. Non-reversible payments. What if I was back in 2011 trying to tell people, let me tell you about this amazing new thing called Bitcoin. You can send money to somebody, or someone can send money to you, but then they can reverse it at any time in the next 10 minutes or maybe even several hours, depending on the congestion in the network. People would say that kind of sucks. And another thing that makes Bitcoin Bitcoin, on-chain transactions, right? That's right there in the very definition of Bitcoin from Satoshi Nakamoto himself, talking about how Bitcoin could scale on-chain to have more transactions per second than Visa. And he was talking about this way back in, I think this email is probably from 2010, I would guess. And again, Bitcoin is defined in the very white paper as a chain of digital signatures, right? That's a very important part of the definition of Bitcoin. Another part of the definition of what makes Bitcoin Bitcoin are transactions and scripts, right? The opcodes in Bitcoin. And again, one CPU, one vote with SHA-256 as the proof of work mechanism there. That's a defining characteristic of Bitcoin. And another very, very, very important characteristic of Bitcoin is the longest chain with the most proof of work. And these are all directly from the Bitcoin white paper. And there's the things that make Bitcoin Bitcoin. And we can see that in 2011, when I got involved, and on through 2012, 13, 14, probably until 2015 or 16-ish, Bitcoin had all of those characteristics. It had every single one. We have all the green check marks right there in the box. And we can also see a list of the things that made Bitcoin popular to begin with. And from a marketing perspective, I think this is incredibly important, because if Bitcoin hadn't been promoted to the world, nobody would have known about it. And we can see the things that made Bitcoin popular to begin with were that it was a peer-to-peer electronic cash system. So Miko covered that a bunch in his talk as well. If you have a third-party intermediary sitting in between, it's not nearly as interesting or useful, and you lose most of the benefit. So it has to be peer-to-peer, person-to-person, direct. Low fee, of course. Everybody wants things that are fast, or low, cheap, right? As I was saying, cheap, fast, and reliable, right? So we have low fee, fast payments, reliable payments, and non-reversible. Bitcoin of 2011 had all of those things and made it become super popular all over the world because it had those things. The fundamentals are incredibly important. So that brings us to today. We have Bitcoin, the coin that everyone's calling Bitcoin in 2018 with the ticker symbol BTC. Ask yourself, is it a peer-to-peer electronic cash system? No, it's not anymore. The people that are behind the BTC development are openly hostile to the idea of using it as cash. We have people like Charlie Lee right here saying, just use Litecoin. And he's right. If Bitcoin doesn't work as a peer-to-peer electronic cash system, people should use Litecoin. So Charlie, feel free to quote me on that. Low fee. If Bitcoin transactions in December of last year, the average fee, not the maximum fee, the average fee on the network was $50 for a single transaction on the Bitcoin network in December of last year. It was unusable. $50 for a single transaction on the Bitcoin network. That was the average price. And if you were running any sort of a business like I was that was accepting multiple payments for multiple customers around the world, I was regularly paying over $1,000 a transaction in fees to move the money. And as any smart businessman would, if you're paying $1,000 in fees to move the money, you know where I was moving the Bitcoin, the BTC? I was moving it directly to an exchange to buy Bitcoin Cash. Because $1,000 a transaction, that's not usable. $50 a transaction, that's not usable. Bitcoin transactions need to be fast, cheap, and reliable. And the Bitcoin of 2018 doesn't have those fundamental things behind it. And we should talk about fast payments. When the blocks became full by the intentional design of these BTC developers, the payments were no longer fast. The average confirmation time got up to being hours or sometimes even days for a transaction to go through on the network. compared to Bitcoin 2011 when the transactions were basically instant, what a horrible, horrible degradation of the user experience of Bitcoin. And then they also introduced this thing called replace by fee, where transactions can be reversed at any point up until they're included in a block. And most transactions used to be included in the very next block when the blocks weren't full. But when the blocks became full, that window in which the transactions could be reversed became hours or even days sometimes, or sometimes weeks, or sometimes the transaction never made it into a block and it was dropped from the mempool completely. So the fundamental things that made Bitcoin popular to begin with are no longer present in the version of Bitcoin here in 2018 with the ticker symbol BTC. But this is interesting. Here are the things that made Bitcoin popular, the exact same list. If we can compare the BTC version of Bitcoin today in 2018 with the Bitcoin Cash version of Bitcoin in 2018, we can see that Bitcoin Cash has those fundamental characteristics that made Bitcoin popular to begin with. It doesn't have the Bitcoin name and the Bitcoin ticker symbol BTC, but it has the fundamental characteristics that made Bitcoin popular to begin with. And I think any investor that invests based on fundamentals, which I think is any smart investor, should be paying very, very close attention to this. And we can see, not only was it the things that make Bitcoin popular, but it was the things that define what Bitcoin is. We have the same list from before, but in 2018, of the list of, I think it's 10 things there, Bitcoin Core only has 2. The BTC version of Bitcoin only has 2 of the 10 characteristics that make Bitcoin Bitcoin, as defined by the Bitcoin white paper, Satoshi Nakamoto himself, and the original Bitcoin.org website. Bitcoin Cash has 9 of those 10 things. So stop and ask yourself, by any reasonable objective definition, it's very clear that Bitcoin Cash has more Bitcoin-ness about it than the coin that everybody in the media is busy calling Bitcoin. The coin that has the characteristics that made Bitcoin successful in the first place, the one that has those characteristics today is Bitcoin Cash. It's not the one that everybody's busy calling Bitcoin in the media. And don't underestimate the importance of branding. Bitcoin has this worldwide brand recognition at this point, but the thing that everybody is calling Bitcoin today isn't the Bitcoin that became popular to begin with. That Bitcoin, the one with those characteristics, is Bitcoin Cash today. And we can see here it again. Bitcoin in 2011 had 100% of those characteristics. The coin with the ticker symbol BTC today that everyone in the media is busy calling Bitcoin only has 2 out of however many are up there. And Bitcoin Cash has all but 1. So from an investing standpoint, we know the exact reasons why Bitcoin became popular in the first place. From here on out, it seems very, very clear that the investment prospects for Bitcoin Cash are much, much brighter than for BTC. And it breaks my heart as the first person in the entire world to start promoting and investing in this ecosystem, but the coin with the ticker symbol BTC today that people are calling Bitcoin doesn't have any of the things that made Bitcoin popular to begin with. Right there, easy to see. It's no longer a peer-to-peer electronic cash system. In fact, the developers behind BTC at this point openly mock people who want to use it as cash. It no longer has low fees. It no longer has fast payments. It no longer has reliable payments. And it doesn't have irreversible payments. And you may hear people talking about Lightning Network here and there. Lightning Network doesn't exist yet. It isn't usable for commerce yet. But we heard Miko talk about the importance of not having a third party. Well, with Lightning Networks, you have to route through all these hubs. They can censor you or block you from being able to connect to their node. And they're the very definition of a money transmitter. So we're seeing all sorts of pressure coming on exchanges from regulatory bodies. You'd be incredibly naive to think that regulatory pressure isn't going to come on Lightning Network node operators. So I don't think Lightning Network's a solution here anyhow. So all of these problems here that we just listed right here, all right, how did this happen? How did Bitcoin go from being amazing and having all these wonderful characteristics that made the entire world take interest and want to start using it? Well, it was due to a bunch of people who may have had an understanding of the software code, but they had zero understanding of the economic code that made Bitcoin successful to begin with. Not only did they have no understanding of it, they were openly hostile towards people who did have an understanding of the economic reasons that Bitcoin became popular to begin with. And I'll point out to you that if you get the economics wrong, it doesn't matter how good of a computer programmer you are. To quote somebody out there, Bitcoin is an economic system that uses cryptography. It's an economic system first and foremost. And if you break the economic system that underlies Bitcoin, you've broken Bitcoin. And I think I showed in the previous slides that the economic code that made Bitcoin a success has been broken on the BTC chain. And if you don't believe me, right, here's what they were advocating. So Bitcoin Core and Blockstream intentionally advocated for 1 megabyte blocks. And I have this in bold and italics here. To intentionally create high fees. That was their stated goal. They intentionally and openly said they wanted high fees and full blocks on the blockchain. And for anybody with any sort of business sense at all, you know that the transactions need to be fast, cheap, and reliable, not fast, expensive, and reliable. And the side effect of making the blocks full creates not only high fees, but it makes the transactions unreliable and expensive. And that sounds crazy that anybody would want those sorts of things. But if you don't believe me, I put together a bunch of quotes from these exact people so you can hear it right from their own mouth here, or right from their own keys on the keyboard. So here we have George Timon, who was working at Blockstream and was a Bitcoin Core developer. A direct quote with a link in the blurry link from the bottom there on the screen. He says, "Higher fees may be just what is needed." And we can see I have charts on the left and the bottom here. The left is the fee on the BTC chain, and we can see that when the blocks became full, the fees absolutely skyrocketed and went crazy, up to over $50 per transaction on average in December of last year. And at the same time when that was happening, Bitcoin's market share, the BTC form of Bitcoin, its market share plummeted because anybody with any business sense whatsoever started using other coins because there's a whole bunch of other altcoins out there vying for share within the market. We have Mark Frenbach, again, another employee of Blockstream and Bitcoin Core developer, saying, "Slow confirmation, high fees will be the norm in any safe outcome." Well, that's nonsense as well. And I don't call Bitcoin losing the vast majority of its market share. That's not a safe outcome. That's the slow death of Bitcoin in its quest to become worldwide cash for the world. And here we have a quote from Greg Maxwell, the CTO, up until recently of Blockstream and another core developer. And he said, "I don't think that transaction fees mattering is a failing, it's a success." Not only did he say that, but in December of last year, when the fees on the BTC network got to $50 on average per transaction, he was busy writing emails on an email chain there talking about how this is a wonderful success. And he talked about how he's literally popping champagne to celebrate the success of the fees becoming so high on Bitcoin that people like me and every other businessman with any sort of business sense started looking for alternatives to use something other than Bitcoin. So here is the CTO, the Chief Technology Officer of the company that's employed more Bitcoin Core developers than any other company, literally talking about popping champagne and having a toast because the fees have become so high on the Bitcoin network. This is madness. And here again we have Peter Willey, also a Blockstream and a Bitcoin Core developer, saying, "We as a community should indeed let a fee market develop, and rather sooner than later." And we can see the exact effect of those fees becoming high on the BTC network and BTC losing its market share and businesses moving away from BTC. Nobody paid any attention to altcoins until the writing was on the wall that the Bitcoin network is going to become congested, the fees were going to become high, the transactions were going to become slow and unreliable, and any prudent businessman started looking for alternatives. So here's these people celebrating the fact that that happened. And Luke Jr., another Blockstream contractor, I believe. He's very clear that he's not an employee, he's a contractor. Okay? He says it's no longer possible to keep fees low. And he was saying that in reference to the BTC chain. What a bunch of nonsense. Here we have the daily Bitcoin BTC fees relative to Bitcoin Cash. And it might be a little bit blurry and hard to read, but the bottom line is 0, and then the other numbers there are how many hundreds or thousands of times more expensive it was to transact on the BTC chain than the Bitcoin Cash chain. And so on average there, it's been somewhere in the ballpark of 50 to 100 times, sometimes spiking to thousands of times more expensive on the BTC chain than it is to transact on the Bitcoin Cash chain. And an argument you'll hear oftentimes from people is, well, that's because nobody's transacting on the BCH chain. There's not as many transactions on the BCH chain as on the BTC chain. Well, we have another slide for that here. Here in green are the number of transactions on the Bitcoin Cash chain versus yellow for the Bitcoin Core chain, the BTC chain. And we can see that just recently there was a big giant test on the Bitcoin Cash network in which it had, I don't know, 12 times something? I mean, way more times, more transactions happening on the Bitcoin Cash network than on the BTC network. And it's right at the end of the chart there. And if you look, you can see, if we go back a slide, that these were hundreds of times lower on the Bitcoin Cash network while doing multiple more times transactions on the Bitcoin Cash network than on the BTC network, which means this guy right here had absolutely no clue what he was talking about. He was absolutely wrong, and proven so with empirical evidence right there on the blockchains for anybody to evaluate. There's not even any room for debate at this point because the evidence is right there for everyone to see. This guy had absolutely no clue what he was talking about. I'll wrap it up quickly. We're almost to the end. And so that brings me to why I'm so excited about Bitcoin Cash today. For the exact same reasons I was excited about Bitcoin in 2011. Because Bitcoin Cash has a giant impact on the amount of economic freedom we can bring to the world, which lifts everybody up out of poverty and raises the standard of living for everybody. And it's because Bitcoin Cash, as a peer-to-peer electronic cash system, and any digital currency that works as peer-to-peer electronic cash, makes it easier to start a business, enforces property rights, promotes free trade, enables freedom of contract, and it enables people to opt out of corrupt systems. Let's hear it for people in Venezuela starting to use cryptocurrencies, right? That's fantastic. And it's permissionless money for the world. That's why I'm so excited about all of these things. And Bitcoin Cash. And so let's ask yourself, Bitcoin Core, BTC's impact on economic freedom as a peer-to-peer store of value? What does that do to bring more economic freedom to the world? I don't know. But peer-to-peer electronic cash system that anyone, anywhere in the world can use, that has a giant impact on all of humanity. And again, a quote from Brian Armstrong, if we can create more economic freedom in the world, it will serve as a giant economic stimulus package for the world, accelerate innovation, reduce wars, make the poorest 10% better off, overthrow corrupt governments, and raise happiness. And that's why I say Bitcoin Cash and digital currencies are the best tools the world has ever seen to accomplish these goals. And that's why I'm busy promoting them every single day, all day, every day. And if you share these goals, get started today. Visit bitcoin.com. It's a fantastic resource to get started. And that's me. Thank you all very much for listening. I appreciate your time. Turns out I didn't have a timer here the whole time. I didn't even see it once.
No problem. All right. So my first question is, can you break down your crypto portfolio by percentage, making clear Bitcoin and Bitcoin Cash?
Sure. So the percentages change daily. I think most people are interested in the terms, the dollar value of the different percentages. And any smart investor, diversify, diversify, diversify. Don't put all of your net worth in cryptocurrencies, and certainly don't put all of your net worth in one single cryptocurrency. Hold a basket of cryptocurrencies. So I hold more Bitcoin Cash than anything else because it still has part of the Bitcoin name. It has all the reasons that made Bitcoin popular to begin with. But I even hold some BTC. Not much. I have been selling a lot more this last week, actually, because the price is so attractive. And even if you think that BTC is much more likely to get more traction around the world, I think the exchange rate between BTC and BCH at the moment is somewhere in the ballpark of 13-to-1. I don't think BTC is 13 times more likely to get more traction than Bitcoin Cash in the world. And I'll concede, maybe it's twice as likely. Maybe it's 3 or 4 times as likely. It's not 13 times as likely. So I've been selling a bit more BTC for Bitcoin Cash, but I own Ethereum, Ripple, Dash, Monero, Zcoin, Zcash. I own a whole basket of cryptocurrencies. because any smart investor likes to diversify. So percentage-wise, man, the internet's so horrible on the boat and the price has been so volatile, I don't know. I'd have to check and I'll have to get back to you next time. So.
Okay.
But it's more Bitcoin Cash than anything else, I will tell you that.
Okay. And in the upcoming fork, can you explain the differences between Craig Wright's Satoshi Vision versus Jihan Wu's Bitcoin ABC, and also who you are going to be supporting?
So that's I think, a pretty big common misconception at this point. I don't think there's going to be a fork or a split in Bitcoin Cash in November. I'd be really surprised if there is. What I think is going on is that there's a little bit of ideological, very, very slight difference between two camps in the Bitcoin Cash camp. And I think a lot of the BTC people that are super angry that Bitcoin Cash is trying to claim that we have more Bitcoinness about us than the BTC chain does, which I think I proved pretty conclusively here with my slides. Those people are very angry and they see this little tiny crack within the BCH ecosystem, and they're trying to widen it and make it into this great big giant fight that it's not. So we've been running Bitcoin Unlimited since we started our pool on pool.bitcoin.com, and I think we're probably likely to stick with Bitcoin Unlimited unless something major changes.
Right, thank you. And so my last question actually is, you were talking about fundamentals, so I'd like to go into fundamentals, and investors and institutional investors is obviously a big part of the news. So in the space, there's a lot of confusion for institutional investors right now, especially where they should get in, which coin, how you can even calculate what type of CAPM, IRR, if it makes sense from a risk ratio reward. Now, Bitcoin Cash has been down 50% to Bitcoin in the past 3 months. Can you explain why an institutional investor would choose Bitcoin Cash versus Bitcoin when it seems that it would be the safer and more interesting speculative investment?
I think they should go back and watch Miko's slides where he showed the little tiny, for those of you that weren't in the room, Miko showed a little tiny snippet of Apple stock where it went down a whole bunch, and then he zoomed out and you can see what happened afterwards. And I've been in Bitcoin. I remember, I bought my first Bitcoin at a little less than $1 each. And I remember in 2011 watching Bitcoin go from $1 to $30 and think, oh my God, this is amazing. What kind of thing? And then I watched it go from $30 all the way down to $2. Right? More than a 90% drop. But I didn't sell a single one because the fundamentals were there. The fundamentals were so clear that Bitcoin was going to become used as a person-to-person, worldwide, peer-to-peer electronic cash system. And so I held every single one, and then as we all know, Bitcoin then went from $2 to $20,000 over the next couple of years. And the fundamentals that drove that price rise and that adoption around the world are still present in Bitcoin Cash. Those fundamentals are no longer present in BTC. So that's why I'm more than happy to hold my Bitcoin Cash along the way. And yeah, it's been down a lot this year. Not nearly as much as it was in 2011 when I was a believer. And so I'm a fan and a believer in Bitcoin Cash today for the exact same reasons I was a fan and believer in Bitcoin in 2011.
Great, thank you.